The UK economy is to expand 0.4% next year and 1.2% in 2025. So that's next year unchanged of being 0.4%, and the 2025 prediction is downgrade.
Oh, you guys hear me in YouTube land? Anyone? Bueller? Bueller? Alright, I'm assuming you guys can hear me since I can hear myself. It's kind of a dumb question. Alright, I will be back in 90 seconds after this disclaimer.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in most Apple Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record capability account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses on material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general and to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This trade room and this webinars are not intended to mirror my trades or to give some trade recommendations. The analysis of I share trades and potential trades that I take for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade and for themselves without being decision makers. Trading is extremely risky if you decide to follow my personal trade, you can store your own risk and potentially lose your entire account even more. And that was profitable and have 14 drawdowns on my trading accounts. The spreadsheet I have access to is my personal spreadsheet that I use at Arizona Value to make the value that I need to put exact prices on. You can see when I add Arizona prices to the master spreadsheet as well as prices that trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use your mind to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction trades, it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alright, give me 1 second here, guys. I was trying to just missed a trade here at NASDAQ. No fault but my own here. Alright, so there are some stop runs here in NASDAQ. There's nothing going on literally until about 5 seconds before I got on this webinar. You can see this. There's 2 stop runs here. Hold on, I may just hop in this trade so I don't miss. I'll be chasing it down. So the entry is at 15.4. We'll go over that here. I'm probably just gonna hop in here just in case. Alright, so I'm short. We'll go over why here in a second. So anyway, there were 2 stop runs, 2 buy stop runs, 160 and 160. I combined the 2. This is the automatic zone drawer. Hold on, somebody's something here. So anyway, these are stop runs. Remember, stop runs are usually retail trader pukes, and this was an important area that we watch in the room. We call them inflection zones. Hold on, let me get my jar guy here. So this zone here, it's inflection zone, and you guys can get access to this in my room. This is free. The spreadsheet's free if you're part of my trade room. If you can't get in the trade room, you can get access to it on the through a subscription. Go to Scalpel. I'll put this in the room here in a second, this whole document, but you go here and you can get the spreadsheet that I use, the inflection zone charts are both of them. So again, these are just the charts that show these important zones. So these are based on the 4 important areas of charting. We'll go over that, but a lot of stuff has happened here going all the way back to here. Failure, directional conviction, failed again the other day, and it's failing again. We'll go over what's going on here. This is actually a very important area for NASDAQ. Like if this doesn't hold, we could get an actual decent move down here, even though there's nothing going on. I'm not holding my breath, but so anyway, with inflection zone trades, I if you guys have watched my webinars before, I have two ways of taking trades. I either wait for the conservative entry where I wait for a retest failure and then I go short once it can push outside an ATR, average true range. We'll go over that too. Or if the area is important enough, I don't wait for the retest. In inflection zones, I don't wait for retest. I got in there. Again, my entry was supposed to be, I just missed this entry because I was getting set up for the webinar. My entry was supposed to be, so this is how we do it in the trade room. We plug the zone in that the volume event occurred in, plug in the current ATR at the time, and then it tells you the exact price you go short and where you should stop based on our rules, based on the volume events and ATR. So I actually jumped in at, I chased it down a little bit. I got it at 96.50. So just because I missed it, I didn't want to miss this move because I had a feeling this was going to happen. And so now we've got 40 points in the trade already. So quickly, let's look at some of the area. This trade is really, really bad. So and there's Fed guys talking, and Powell comes out a little later too. So I'm going to be very quick to take profits in important areas. So these are Ludwig levels. So we'll go over thesis as well, why I think these markets might get smoked here. But we'll go over that in a second. Anyway, I don't really see a reason to get out of any yet here. I have specific reasons. So for my position trades, I have two different types of trades that I put on. We have the position trading for these trading strategies. So this was the Izzy trade I just put on an inflection zone. But for these trades, there's certain areas I get out of the trade, and I can't find that document here. Hold on a second. We'll go over that here in a second. I just want to make sure I know where I'm getting out of some of these. Things already ripping back 25 points on me. But that's fine. I mean, I don't have what you could have got out here is extreme standard deviation of VWAP. So we talked about this. I don't usually get out it, and this thing's pretty condensed right now anyway. It's pretty compact. It's going to probably expand here, especially as these Fed guys start talking. But you have these algos that pop in here at these extreme standard deviations and try to rip it back to VWAP. So these are important. I don't get out of my trades just because of this, but if it's confluent with something else, I'll get out. So for instance, if this would have touched, and I'm still watching this, if this gets down to the bottom of this market profile composite, I will get out of probably half of these if I can make it down there. And then my ultimate target for this trade would be probably, I usually get out of the full boat at the red or blue lugs. We'll go over, these are Ludwig levels. They're the second most powerful thing I've ever seen in futures trading. So we'll go over all this as we get into this webinar. That's not what I was trying to do. I don't know why this thing's giving me problems today. Hold on. Delete this and redraw it. So this is a market profile composite. This is the last 2 days merged together, the value area. So the value area of a trading day is 70% of where the trade occurred. And when you have days overlap, I draw these composite. That's what these blue zones are, right? So they're very powerful. The more days you have in a composite, the more powerful it is. So let's get into thesis quickly. So just from this stuff, this is looking bearish to me. We have like 3 or 4 things that we look at to come up with a thesis for the day. I'm a day trader. I'll trade both ways, right? I'll trade long and short. But when I get a thesis, and then I start getting like if I get a short thesis like I basically have right now, I should have traded this trade actually bigger size. But when I get a volume event that corresponds with my thesis, and then I can trade bigger, that's an A+ trade, right? So you never want to trade too big where you're risking more than 6% of your account size in a day, 5 or 6%, but we'll get into that rant a little later. Anyway, what I'm seeing here is this market tried to launch out of this 2-day composite, couldn't do it, got back inside. The normal expectation when a market gets back in its value area or gets into a value area is to head to the other side. So that's looking bearish to me. As far as Ludwig levels, we can come up with a thesis with these. So we use these as support and resistance and coming up with a thesis. So when this thing, you can see this thing, this is very powerful. I think this bounced off the slug like 85 times, but when it finally did draw new lugs, if this market's truly bullish, it should hold the new directional yellow, so just consider that like the point of control, and prior red, and then move higher. If it fails that, then you expect blue. So this is looking bearish to me. And then structure-wise, this is really important for what should have happened, and it didn't. All right, so this was yesterday.
Silver stocks stock by SI, 117 contracts.
Fail breakdown. Right out of the zone, buying tail. Got through the high volume node. That's a fail breakdown. This market should have done that. This market should not be coming back here. So this is a really, really important area. If this market fails, like I said, when markets should do something and they don't, the subsequent move is usually even bigger. So that should have ripped. It didn't. Fail at the zone. If this gets a little lower, I think this is coming down to minimal here, maybe lower than that. I'm not sure for today, but that's my thesis, right? So it's hanging by a thread. So the point is, well, how does that help me? My theses are, I'm pretty good at coming up with a thesis, but they're not. That's not my gift, right? My gift is short-term trading and finding these tendencies. But again, if I get a volume event that's I should have already been short this first one double size, but say this starts to move lower based on what I just talked about with the lugs, with the market profile, with the structure. I get a volume event, I'm going to trade it double size, right? So that's NASDAQ. I'm already short that, like I said. I would be watching to see if we can get down here. If this rips up on me, speaking of which, I need to put my stop in because I didn't put that in. So this is all in the spreadsheet here. So I got in at, it was supposed to be 15.4. I got in a few points through there because I missed it. And then my stop goes here. So, a lot of you newer traders come in here and you're like, what the hell? He's risking 51 points on the trade? Yes, I'm risking 51 points in the trade. This is a position trade, so I expect multiples of that if I'm correct with the move. But more importantly, I don't let algos snap me out of this trade until certain things can happen, right? Because algos are 85% or more of the market, and then they start, this is what this is right here. You see this spoofing that's supposed to be illegal? Well, it's obviously happening, right? So point is, when nothing's going on in these markets, these algos start whipsawing you. So for me to be wrong on this trade, I'm demanding this comes back the full however many ATRs to even get back to this zone, and then it's got to push through this event to prove me wrong, right? So that's how I trade. As the market moves in my favor, makes money available to me, I get out in important areas. We'll go over that. And this just wasn't, I could have got out of a couple here, but I didn't. There was nothing major, so I'm still in the trade full boat. But as we move lower, I will be really watching what happens if we can get down to here. And we'll use tick strike and market pulse when we get to those areas. That's like the real-time orders coming in. You can judge when you get to an important area that you're watching. You can kind of judge, hey, is it going to push through or is it going to stall? So we'll keep an eye on that. In the meantime, now I'm going to get tortured, and this doesn't surprise me at all. The relative volume was actually terrible. It wasn't that bad, but there was really nothing going on. And now you can see it's kind of picking up a little bit, so that's good. So when you see this starting to pick up, that means the big money's starting to play, right? You can see this, and this turns yellow. This is a relative volume chart. It's a 5-minute relative volume chart on Sierra chart. This is not the same as the Thinkorswim relative volume. This is showing me the exact time period for the last 30 days for this 5-minute time period. So you can see for the last 30 days, this is 2 to 1, more than 200%, 2 to 1 volume that's normally traded at this time period. That's important information. That means that's telling me there's big money playing in here. It doesn't mean it's just going to free fall. It could be big money that's absorbing these orders too. The point is, the area is important. Just like our volume events, the areas are important. So whatever happens out of this area is probably going to be the bigger move. If this rips higher, then I'm going to get stopped out and this thing should rip. But like I said, this is right like decision point for NASDAQ here. This should hold, right? Based on what happened yesterday, this should hold. It should not get back below that high volume node of this balance area. And you can see it's put in a buying tail. So it's holding where it should right now, and this could rip up and stop me out. But I'm telling you, if it gets through here, it's very likely going to do that. So now we just sit and wait. The trade's on. We're trading in probabilities. If I get my setups, I take my trades. If they lose, on to the next one. I know I have an edge. I know over the long run that these will be profitable because I've watched about 5 million of them over the last 7 years. So I know this is the edge, and that's part of the issue with traders. They never really know if they have an edge or not, right? They're just jumping from new thing to new thing. They see on Twitter, like, oh, I'm going to try that out. Oh, I like this thing. And then it works for a couple days, and all of a sudden it doesn't work for a week, and then they abandon it and they jump to the new one, right? I've watched so many of these, and you can ask anyone in my trade room that's watched enough of these that they have these patterns that they trade off of, and I know this is the edge. So that's one of the important characteristics of my trade room and learning this stuff on these webinars is you don't have to guess if this is an edge or not. It's the edge, you know, as far as I'm concerned, from all the trade that I've watched over the last 25 years. And if you don't believe it, you can, you know, get Bookmap, replay the days, draw the zones, and see it for yourself. But this is the edge, so I don't have to question whether I have an edge. Now it's up to me to not screw it up mentally, right? Say, oh, this one feels bad, I'm not going to put that one on, or this one feels great, I'm going to put on, you know, 10 times size, stuff like that. I have my rules, and I follow my rules, and we'll go over that as we hopefully put some more trades on. Let me take a breath here, and I will post this in the YouTube room. Guys, so this is basically my new course, goes over all this stuff that we're doing in here and that I teach. That is this here, and with this I can add stuff, and I will be adding. There's a new setup, and anyway it shows you, you know, how to set stuff up and settings and how to draw the zones. We've evolved, like this was the basic way we used to draw zones, and this has evolved as these bonus videos have come in, and there's more to come here. And then these are just distinct setups that I take, right? So the one I took up in NASDAQ was a Dumb and Dumber. What's a Dumb and Dumber? Well, it's the dumb money, the retail trader. And again, I say it every week, don't be offended, I'm a retail trader too, but they're just not, they're dumb because they're not as big as the big money. The big money makes themselves smart because they control the market with their size, right? The retail trader doesn't have the size to control the market, so they're the dumb money. Anyway, that was a puke. Usually it's just the retail trader getting out of trades. It's not initiative buying. And you see this thing did free fall 60, 70 points right off the bat. So I took my trade off of that distinct setup. Right? So then we have stop and hold, Titanic, broken ice, double whammy, step rows. So we'll go over, hopefully we'll go over all these. I doubt it on a day like today. Then I talk about how we use the ATR and then the advanced trading of zones, and then you get to see my smiling face right there. So that's the course. And then everything else in here, this is for the spreadsheet and the inflection zones. If you want that, that's the subscription. Here's my website, email, Twitter. Here's my trade room if you want to join there. Again, you get the spreadsheet and inflection zones for free in there, among many, many other things. I think it's the best deal in the world, but you can come in and find that out for yourself. And then these are all the things that I use in my trading. So Bookmap, all these have discounts. Bookmap, what you need to, you know, the MBO for the SI indicator, you need the MBO bundle. This is in the Bookmap marketplace. And then here's Apex, we'll go over that. I don't know, I think their 90% sale just ended, but they still have some 71% sale. We'll go over that. Anyway, Spot Gamma, we'll talk about that at length today. I've been doing a lot more with this hero. Actually, let's take a look at this. So people that have used this in the past, you know, kind of, and there's even people in my room that are like, oh, this thing's just noise, so on and so forth. These are major players in the market. This is showing what options dealers are doing in the market. They have to hedge their positions, their options positions with futures. So you might want to understand what they're doing in important areas, right? Right now, it's basically just moving around with the market. But there's times where you'll see the market rip up here, and I've shown many examples in Twitter lately. I put a couple in the Bookmap room.
The Fed will stay restrictive until they're sure about the 2% inflation.
Is this guy still talking? I think they're still talking. Anyway, you'll see the market do this, and then so the options is this gray or green, whatever color that is. I have this set at colorblind. They actually have a colorblind option for you guys that can't see the colors. And you'll see the options flow start to rip the other way, and then the market turns over. So I've shown plenty of examples here. This is Twitter, but I put it in the Bookmap as well. Let's see. Just show you a couple examples here. Here's one here. Yet another incredible signal to take a short in the S while the buy stop retail. This is kind of like we just saw in NASDAQ. I'm not saying this was the setup in the options, but it's a perfect example. You're using your Bookmap SI events to, you know, the rules we have around these, and then using this. So we already know, like in this instance, this day, this was last week or 2 weeks ago, whatever November 3rd was. Retail trader puke. Well, you know that's not initiative buying most of the time. It's just the retail trader puke. So right there, you're saying that's inherently probably going to be a bearish setup. And then you see this thing had already started turning over. So that was that stop run up here. You see this is already starting to head lower. What's important is the notional value of this. So when you're getting 800, 1 billion or more moves, so you can see it on the side here, that's really important information. The market can't withstand these options dealers with their futures hedging, so the market's going to turn over eventually when you get big enough moves. So this is just showing you the size that the dealers have to hedge, right? So it behooves you to know, hey, that's a stop run. Wow, look at that. This is moving $1 billion plus the other way. This was more than that. This was almost 2 billion, 1.8 billion. I want to jump in a short, right? So this is, outside of the rules that I'm talking about, but I'm saying we're going to have new rules for this too. So this doesn't happen all the time, but it happens quite frequently where you'll see this, where we have the rules where you wait for the ATR, as you've seen in the webinars. If you see a stop run and you see this thing moving the other way, notionally a big move, you can just hop in the minute you hear the damn stop run and put your stop just an ATR above there, and then you don't have to wait for the ATR, right? Either way, this turned out to be a big trade. So that's how you can use this information. So there's so many traders, like I go back and forth with this clown on the internet, on Twitter here. It's just noise. Oh, it's the footprint. It's all about the footprint. Guys, I traded with the footprint. I tried to trade with the footprint for many years. It's important information at certain times because it's volume, right? That's my whole driver of my trading is volume. Yes, it's important. But these little like POCs and it's a poor high or whatever the hell they talk about. And, I used to do all that stuff, and it's not a distinct edge as far as I'm concerned, right? So the point is, yes, sometimes this is noise. Like right now, it's just noise. It's just back and forth, and the market's it's bouncing around with the market. But there's other times you really want to pay attention, kind of like anything that you watch in trading, right? Nothing works all the time. Sometimes it's important, sometimes it's not. So that's my rant on that. So as I get algoed around on this trade, which is not surprising. Let's see if you got questions too, throw them in the YouTube if you could. Okay, good morning. So if you got questions, throw them in there. Anyway, to finish this off, and then so that's the Spot Gamma. You can get 2 weeks for free on this thing, and you can get their top product or their top offering for free, right? Just go here, go subscribe now, get the alpha. So you get 2 weeks. Try it out yourself. Like anything I'm telling you guys, do not trust blindly. Go in and research it for yourself, right? But you get everything with this. You get the hero, you get the notes. This might not load properly because this is from a few days ago. But you get, and he's got all this other stuff too that he's added. And I'm just learning this stuff too. Actually, I got a meeting with him right after this webinar to keep learning about this stuff. And the more I learn, the more I'll help you guys. A lot of you guys may understand all this stuff, but there's a lot of data in here that you can really. This stuff's more for bigger picture trades, but it's still really, really important, right? So, and he puts out a founder's note every single day, and you really want to pay attention. Sometimes when he uses certain words or verbiage, you really want to pay attention. Basically, he's just saying it's going to do nothing. And he talks about the Fed talking today, and then probably a Christmas rally. And that's not just him like guessing. He's using where the options are, the biggest concentration of options to determine the most likely path of the market. Well, you use this stuff with, if you understand technical analysis or structure, then you can really come up with a sound trade plan, shorter term, longer term. The best trades are when you get your short term setups confluent with your longer term calls, right? And a lot of traders trade that way. A lot of traders will not trade against their bigger picture view, and that's fine too. You got to be very patient, but that's fine too. So the point is, right now this still looks bullish. This is almost not. This gets a little lower. That's going to be a failed breakdown of this and the ES as well. So this is getting real interesting. You can see they're still hitting these stocks. So anyway, highly recommend you guys try the Spot Gamma. I'm going to start using it a lot more in my trading because it's really important information. All right, still short this puppy. So we're going to watch here. This is what I'm talking about. So that 15,400 area, I'm sorry, 15,340 area is the bottom of that market profile composite. I'm going to use this tick strike. That's in that thing too. You get discounts on that thing I posted. And I'm going to use Market Pulse to judge. Move over Market Pulse too. When it gets down there, if I'm going to hold it and see if it can blow through that area or if I'm going to get out of half. this. Let's see here. Still a ways to go, but this is the area I'm talking about. So you have this, and that's going to be extreme standard deviation. It already bounced off there once. This is very compact. This is going to open up here probably. But the head clown talks at 1 o'clock Central, so that should be an interesting afternoon at least. There's another Fed dude talking at 10 o'clock, so 9 o'clock my time, so in about a half hour. So other than that, we just get tortured on this trade. Oh, actually, I missed a yes event now that I'm looking over here. Sorry. So many of you guys love to trade this yes, so let's see what happened here. See if I missed a trade. So this was iceberg, sell ice. See it on here? 709. So that's right at my threshold. Threshold meaning the amount that I will trade off of. That's important. I don't trade these little blips like you see here. This was 267, right? A lot of times when traders get this SI indicator,
it's time to get serious about deterring around.
they're looking at they take every single blip in this thing because they're like a kid on Christmas Eve thinking they do have an incredible edge, but it's not taking every blip on this thing. So I have certain thresholds for each one of these markets, and that's part of the course as well, that I will only trade if it hits that amount. This is one of them, and you can see this automatic drawing tool. That's another thing you get in part of my trade room right now, and we're beta testing it in there. It should be available in the Bookmap Discord. We're going to beta test it in there. You guys can trade out for free in there as well. I'm thinking next week it'll be ready to go, but this just bypasses using this archaic drawing tool that they have not updated. And they've got a lot on their plate. I understand. I've been bitching about this drawing tool for about 5 years now. They're working on bigger and better things, and that's fine. So this programmer is actually in my room, and we collaborated, and I gave him my rules to draw these zones, and now they automatically draw on the chart. So you have to adjust them. Like this one may need to be adjusted, not all the time, but some of the time, and that's fine. Just having this on here, and then all you got to do is basically scroll back and forth, is incredible versus going here, hitting edit, drawing the line, coming back, getting out of that mode. This is just so much faster. So this alone is worth its weight in gold. But then, obviously, sometimes you got to adjust it. But I have no problem doing that. So here's a good example of a zone that looks like it was maybe one tick. So you can see here. So you want to get your cross here so you can follow it. So this is where this started. This was not threshold, but this started right here, right? So this, let's see if we can pull this up here. So it started, you can't really see the bubble, but there was a buy bubble started right about there. You can see it, it's kind of on the line, all right? And the market moved away, came back, triggered some more. See how it's still coming in, and then it comes back, triggers more there. See how this keeps spiking down. Now we're at 197. All right, so that looks like that's going to be the top of the zone minimum, and then the market moved away. So these are not part of the when the thing's flatlining. This is not part of the iceberg. As it comes back, it's triggering more and more ice. Triggers. See how that little blip there, and then the big blip that got it to threshold. So somebody was trying to buy this, and you can see it in the sweep. Somebody was trying to sweep it, and they got a mouthful of sell ice. Icebergs are just hidden orders in the order book. Big money does not want to flash their orders. They're 700. They put a 700 lot in here. The market's going to run away from it, right? The algos always run away from the size. That's why they have to hide their orders, and you can only see them once they're traded into. This is all this stuff's supposed to be invisible. The CME started about 7 years ago now, releasing this enhanced data where you can see once they're traded into, and this is the crux of my trading, right? It's very important to know where traders are loaded up. So somebody was buying here heavy, and a big entity sold it. Right, so that's the whole basis of my trading is to find areas of trapped traders. So anyway, that triggered there, and you can see some actual sell ice started coming in there, but that was still in that zone, and it's not threshold. By the way, they're hammering this. We'll come back here in a second. I think I already missed a trade in there anyway. What am I looking at? Where's Nasdaq? There it is. All right, so this is I'll come back to yes. I already missed that trade unless a retest fails. We'll go over that scenario here in a second. I just want to watch this. So this is another thing you want to watch. This is the sweeps indicator on Bookmap. You get this with Global Plus. If you get Bookmap, I get all these emails all the time. Hey, is a Thinkorswim, is that adequate? First of all, I'm not a fan of Thinkorswim. I'm using it. I have so many problems with it. And the Bookmap version of Thinkorswim is watered down. It doesn't have, I don't even think it has the SI indicator. Correct me if I'm wrong. But anyway, the Bookmap Global Plus is what you want, and that's what you get. This is that discount too. So this shows you the sweeps and everything else. That's, if you click on this, that's what you get, the Global Plus discount, right? It'll load. It's not loading. There you go. So it's for Global Plus. So you get these deals for the Global Plus. Anyway, you want Global Plus because it shows you the sweeps and everything else. And this is where I was going to get out of some here. So I want to see. So this is what I was getting at. This is important information that's happening right now. You can see somebody got aggressive here. Yes, these were part stop runs. But that's important to know. Hey, the seller's engaged here and it didn't really move lower. The usual pattern here is, this is where I'm going to get out a couple of these if this happens right now. So these sellers were aggressive. Like right here, the buyers were aggressive, and that kind of told you something. It retested and failed at the time. So now sellers were aggressive. They're not getting their way either. So if this comes back, and it usually will come back and retest that area. These are just like the SI events. It's uncanny how often these markets come back. So if this comes back to this sweep area and turns around and comes back and makes a higher high, I'm going to get out of a couple of these, because that's just telling me that the sellers are not going to win right now. I'm going to give this a chance. If this comes back now and makes a higher high than it just made there, I'm going to get out of a couple. Take my 25 points and get out of some. So I'm going to put it, because I'm probably not going to be on the screen, I'm going to put it at 15,368. I have 6 on. I'm going to get out of 2. Actually, I don't even think that size was correct. I just threw on that order. Hold on. It doesn't matter now. I just want to see if I have the right size on. I may have traded 2, but that was pretty close. I should add 5 on, so I got 6 on. All right, so you see, it's not, I don't just get out the minute it rejects the area. There's just this pattern, and I talk about this with the market pulse. Hopefully we'll go over some examples where the market will come back. So, like, to me, it's like 95% of the time. Then if it still can't get through there and it comes back again, that's where I'm getting out of some. I know we don't cover that a lot in here, but, and that's just, I don't need to ride the whole thing all the way back. If I see this, the current sellers are engaging right here and they're not winning. Granted, again, some of that was stop runs, but that's fine. So I'm giving them a chance here to blow it through there. If they can't do it, then I'm getting out of some. What did I say? 60, 68. So you see, this is how you can use all this order flow together to really judge what's going on. Obviously, the SI events are the most important driver. But you can use the real-time swipes and sweeps. I call them swipes sometimes. Sweeps. You can use the market pulse. This wasn't really big selling. You can't really see it here because of the stop run. But you'll see when there is a here. Let's see if we can find an event. I'm sure there was a pattern that we can find here. Let's just turn this stop run off for a second. Like there is this at the time, right? You can see the sweeps. You can see. So I have my marker pulse. We'll go over the settings on that a little bit. Set it. I want to know the biggest buyer is selling for the last hour, and that when this colors like the black, and I have yellow going the other way. I don't know where I got that color from. Black here, and then yellow the other way, like this one here. That just tells me it's the biggest buyer selling for the last hour. Well, that's important. You can see here they swept it. Heavy selling. How did that work? Rejected at the time, right? So this is another example. You're short here, and you see these seller engage. You don't have to let this thing come back 50 points on you. You can get out of some right here. See what I'm saying? So that's where you use all this stuff in conjunction. So now let's see what happens here. I would like them to start hammering these FANG stocks. Speaking of which, let's take a look at the hero, so that you can do the hero for obviously all these, so many different stocks as well, but they have. And they're getting this fixed, by the way. So if you add this, it's called the Mag 7 Hero. It's just telling you see all these stocks. It's giving you the order, the options flow in there too, which is just as important. All right. Let's add the tab. For some reason, it won't save for the next day. So you got to keep doing this every day. He already talked to him about it. He said their developers are setting this so it'll start to save. Anyway, this looks, it's just moving with the market, but where you want to, again, you're using all this stuff in conjunction. So say that market moves above 68 where we saw the sellers, and say you see the Mag 7 starting to move up. You see the S&P starting to move up. Well, then you could say, okay, I'm out of even more, right? This using all this information in conjunction. So this looks fine to me as far as my short's concerned. let's go back here. I just don't want to miss this. Let's try to do this. I got some new screens here, so they're bigger, so I can kind of do both of this now. I have both of these on here. Excuse me. I just don't want to miss this 40 area because the way this is trading, it's very likely going to bounce, and I'm definitely getting out of half down there. And here's a perfect example too. Like, do I need, now it's 15 points, but it gets close to 40. Do I need to try to squeeze? Here comes the buyers too. Try and see how they're sweeping. But the point is, 40 was the area I was looking at. If it gets to 45, do I need to try to squeeze out 5 points to watch this thing come back 50? No. So this is telling me something right here, by the way. Let's see. I'm just going to get 2 of them here instead because of what we just talked about. It got close to that. So I was going to get out of 68. I just got out of some here. I don't need to let it come. It's pretty likely going to come back above here now. Especially I saw that. It got pretty damn close to that market profile composite low. I'll get out of a couple. If it comes back down here and starts to bounce again, I'll get out of a couple more. So that's pretty important, right? Someone just swept there. Again, you could wait, see how this responds here. This could still head lower, and I still have some on. That's fine, but here we go. So I think I just saved myself 10 points. All right, so I'm still short that. Now let's see what we can do here. I just want to make sure this zone is accurate. And yes, this looks like this was a 1-tick zone to me. This was at 4,400 exactly. We already kind of went over drawing this. You had a little bit more come in, but that's not worthy of drawing. So I would have this as a 1-tick zone, 4,400. So let's just move this up. This drawing tool only goes within 1 tick, doesn't go to the exact tick, so it's always going to be 1 tick wide. But we know it's at 4,400. I don't know why it's not going up. Oh, because it's within 1 tick. All right, so let's plug that in the spreadsheet and see what we got. Because I can still short this potentially on a retest failure. So you come in, you put in your zone price. This one happens to be 1 tick, or 1 price, 4,400. 4.31 is your current 5-minute ATR. I'm using the Thinkorswim. You can get it on most platforms. Sierra chart, it's a 5-minute ATR. While there's ATR, it's a 14-period default. That's what I'm using. It's just telling you the current volatility in the market. Every 5 minutes, this thing's rotating about 4.5 points. That's what it's telling me. Very, very important information that you want to know. You have so many of you love to trade, where you have these static stops. So I only risk 2 points when I put on an ES trade. Well, that's great when the ATR is low, but when the ATR is 8, 10, 12, if you're risking 2 points, you're going to get stopped out probably 99% of the time just on random moves because the ATR is so large. All right, so to make this short setup, needs to touch 95. I think that already happened. Let's just look at this real quick. Definitely did that. Got even lower than that. Looks like this is, it's not really doing much here. Just want to see if I missed a trade. Was there an aggressive trade here? Yeah. No, not really. I mean, the volume event happened in this Izzy zone, but it was like coming back into the Izzy zone. So the main way to trade these are the inflection zones. We call them Izzies. The best way to trade them are straight moves into it, right?
Icebergs by GC, 151 contracts.
And you're fading the move into the zone. So this one, I can't remember if there's a volume event here yesterday, but that's the kind of move I'm talking about, right? This one, the volume event kind of happened in the edge of it, but it already moved back and down through it. So I'm about to delete the zone on top of it because when a market keeps trading back and through a zone, it's not important anymore, right? So that actually can be deleted because this traded up through it, kind of held again yesterday. Now it traded up through it again, down through it. So this zone is done for me. Hopefully my trade room is watching so they can adjust their zones as well. Let's get rid of this puppy. All right, so basically these are the 2 important zones now. So I would watch very closely. So say that we move down here right now and I get a volume event, I would take that long there. Even though I think this market's going to get smushed based on what we just talked about, if I get a volume event and my ingredients for the trade are there, I take the long. That's just playing the probabilities, right? I just want to see where this is at. This NASDAQ just will not drop. I mean, it's already moved 50 points in my favor, 40 points, but I'm just trying to get to 40 or 340. All right. Let's see if you guys have any questions. No questions. All right. So now I just wait. Now they're swiping again. So guys, this stuff is, a lot of times it's just fleeting. It's just order flow. Somebody swept down, somebody swept up, somebody swept down. You can set this too. I have mine set at, usually it should be set at what my stop minimum is for my thresholds. So I go over here. Yeah, so I got it at 150. That helps me draw my zones. If you don't like that, if you don't like seeing sweeps and you want to see just meaningful sweeps, meaningful is usually 3 or 4 times threshold, right? So if I put this at 600, watch what happens. Actually, those stayed in there. Hold on. It's my natural gas market pulse. We'll look at that. That might be a market pulse setup I can show you guys. Why is this not? Oh, wait, that's why. This is not the sweeps indicator. That's why. Let's try to get on the sweeps indicator. All right, now watch. So watch these all disappear. Like if I make them 600, they're gone. See that? So you can make these whatever you feel is meaningful. I set them at my stop threshold's 150 because I want to. These help me draw my zones too. Even though we have the automatic draw zone drawer, it still helps me draw the zones. So it helps me adjust them. So that's why I have a 150. But you can put these on whatever you want, where you don't see them that often, right? So if you have it at 600 and there's nothing, and all of a sudden you see a 600 sweep, that's meaningful, right? Kind of like the market pulse. You're not seeing anything and all of a sudden you see the most selling in the last hour. That's meaningful. So that's how you can use that. It'd be nice if these markets did anything. Let's see what happened to natural gas. I guess there was no crude number this week and natural gas number. I'm not sure why they're doing that. Someone posted yesterday. I didn't really read it, but there was no number today either. All right, so this is what you just heard. So you can see this market pulse fired off. We can go over this real quick since nothing is going on. I just set this up today for natural gas, so I changed mine to black and yellow. So sell is the black. Come on. Colors, negative, black.
Kirby says the White House wants daily pauses in Gaza to continue as long as they are needed.
So see if there was no buy either. There was no buys today. Basically, that's telling you something too. But anyway, so here's the market pulse. So I have mine set at. So again, to make these, actually we can come up. Oh, here, let's just make one for another market just to show you guys because they have it very confusing. I told them they need to change this and they haven't changed it. I don't know why, but let's just come up with another market. Like let's do Bitcoin. How about Bitcoin? So I'm watching futures so if you want to trade Bitcoin or use the futures, I would use 25 as your threshold. That's a meaningful area where you can draw your zones, just like you see 500 or 700 in ES, the same thing. Anyway, let's set up a market pulse here. So you go here, go to market pulse, hit create. This is where this is screwed up. I do not like this. You get so confused. You're like, well, wait, how do I get off of that? You have to come here. This should give you the option of all the different products right away. It doesn't. It sticks you on ETH, the crypto. You got to come over here. I use volume, pressure, and balance. Click on that. Now it gives you the options. I don't know why they have it set up like that. Anyway, so we want Bitcoin, obviously. Now expand this. Now I want to see, I don't want it for every 5 minutes because you're going to see blips all over the place. I want to set this for an hour, or you can set it for 48 hours if you want. Even more meaningful. You're not going to get that many signals. And then you do all that. This stuff. The rest is all default. So it'll start to draw that like that black little spike that I showed you. It starts to draw that when the market gets to at least 70% of the most buying or selling for the last hour. I have it set at an hour, 70%. Then you start it. And then it looks like this. It'll load up. And if you don't want to hear it every time, if you want to hear it, don't mute it. If you don't want to hear it, mute it. So then you can see now the biggest buying or selling in here. And then I change my colors again. Let's just see how this market reacted. Again, this is just this random. We don't even really talk about in here, but I'm just going to show you. It's all the same stuff. It's all about order flow. Granted, the cash market is king in this market, but you can imagine if you start seeing like icebergs in here, you can jump in the cash market if you're trading Bitcoin. that's what that looks like. So let's just see. Just futures alone. This is futures, right? This is not cash. You can see here, sellers got aggressive. No go. Buyers got aggressive. Remember, this is showing the most buying and selling for the last hour. That's kind of still sitting here. Let's see. They won, right? Really, it doesn't matter what market you're using. If this is just information. You're like, okay. So say you're long. You ride this up. You see this. All right, the buyer's engaging. Sweet. I'm going to hold on to that. Oh, if it comes back down here, why do you want to hold on to your full long if these buyers were really aggressive and they couldn't push the market higher? In this case, they did. At least temporarily. This stuff's very fleeting, but then you got another setup here. So this is exactly how I would have traded that. Say I was long, I'd be like, okay, I pull my stop below there for some. I'm not saying I get out of all of them. And then you can see here, they were aggressive again. How did they do there? Here's your retest. Makes that new low. Get out of some. See how you can use all this stuff together? That's just random me pulling up Bitcoin, right? You can do it with any market. You can do it with corn. You can do it with bonds. Doesn't matter. And then you use this SI event stuff. This is the king, but you can use the market pulse to really help you identify areas or to lighten up some of your trade. Lighten up, Francis. Movie. No one knows what Lighten Up Francis is from. You guys are pathetic. Very sad. There is a delay, so maybe I'll give you guys like 5 seconds. You can't Google it. My trade room there yesterday, Madam Shizzle actually put in the video quote. It's Animal House. All right, anyway, EI changes their system. That's why they don't report sale on NG this week. Okay, so I guess the number.
December stocks top by CL.
Hey.
235 contracts.
I told you guys there's a camera in my office. They knew I was talking about it. See how that just drew the zone by itself? Awesome. Love it. Such a time saver. All right, so if it draws, it's threshold, right? 235 stops. Quickly, let's see where we're at. I think this is an Izzy zone too. That can fade. It's real close. So these are zones. They're not exact prices. So you can see the exact prices here, but this is close enough. This is where this tail came in yesterday and continued this big down move. We're back here. Dumb money puke. I would fade this trade or fade this setup aggressively. So hopefully it'll wait for me. Plug that in. I always make sure the zone's correct. 77.15. Looks like this popped a little higher here. Yeah, I would draw that up one tick. Let's move that up. So I got 77.16. Make sure we see. So that did not start there. Sweeps can trigger the sweeps always get first right. You see the sweep started here, but there was still some selling on these sell bubbles. So I know the stops couldn't have been there. You have to assume they were here. Sweeps get first right. The stops come in after. So you don't know were the stops here, were they here, were they here, were they here? Well, I know they weren't here because there were sellers. So they couldn't have been there. So I'll move that up to there, right? Because that's where the sweeps continued and there was no selling involved until back over here. So that's the zone. 77.16 to 77.06. Go to your handy dandy spreadsheet, plug in the zone, plug in the ATR, and then potentially trade it. ATR is 0.219, just tells me it's rotating about 22 ticks every 5 minutes. Now I know that's an Izzy zone, so if this moves out of here, I'm not going to wait for a retest. Retests happen all the time. We have a distinct trade. That trade's for the retest. When it's an important area, it may not retest, and I may miss the trade. So that's why I get in aggressively. So there's certain trading strategies here where we wait for the retest. Liquidity trade, we call it LIC. The bark trade, blind ATR retest confirm. These trades are aggressive, meaning I get in the minute it breaks the ATR out of there. That's in the spreadsheet. I'll show you. Slugs, Izzies, Dadas. So these are all the funny names we have, and there's about 50 more coming down the pipeline. I'm going to have a course for this too that goes over each one of these. Hold on, somebody just wrong handle MCL. Big Al just loves to tell me that I have the wrong handle because I do it about 5 times a day. Thank you though. Good catch.
NQ stocks stopped by NQ. 150 contracts.
Alright, so that's not good for my short, but I can trail my stop hopefully in NQ. Anyway, I'm going to short this aggressively at 81. It tells me exactly how I can put, I'm going to round up. It tells me I can put on, I'm going to put on 9 at 81. That's the aggressive short. So let me get that set up. And then I will show you how I'm going to trail my stop now to this new event in Mr. NASDAQ. I'm not going to call him by his bad name today because he's been okay. Alright, so that's working. So I will sell it at 81 if I get filled. There's my stop price. And then I judge. Let's just make sure this could have been a slug too. Let's see. We haven't really talked about the Ludwig levels that much today. Second most powerful thing I've ever seen. Yeah, close to the yellow lug, but nothing. The slugs are only, actually, let's make sure this is Sierra chart. You gotta refresh these nonstop. This might be new lugs. Because it got below here, yeah. Now this is a slug. Wow. All right, so this is trade. This is a great. We know, so there's a lot of confluence up here. We just saw that Izzy zone. Now you got the red lug, very, very, very powerful. Extreme standard deviation of VWAP, and real close to this market profile composite. I'm going to trade. I'm trading that short double size. So I had originally 9. I'm going to put on 18 because this market is obviously bullish or bearish on top of it. Okay, but I'm going to trade the Izzy and I'm going to trade the slug setup. So hold on, let me put that in too. So I have distinct setups or trading strategies. All right, just fill on both of those. So I'm short slug and I'm short Izzy. Now crew can go to 0 and free gas for everybody. All right, and my stop goes 77.41. Why did I fill? 77.41. Let me put that in so I don't forget, like I do constantly. All right, those are working. Stops in. Now I will watch as this thing moves lower. If hopefully it'll move lower, the areas that I will get out. Right, we'll go over that as that happens, hopefully. And if it doesn't, then on to the next trade. This is the edge. I know if I take these religiously and consistently, I will make money in the long run. That's what an edge is. That would be nice if it just swiped down to 0 and one pop here. That would be great. Highly doubtful. Crude is probably the biggest whipsaw market out there. And that's fine, right? I don't say, oh man, yeah, I already got 20 ticks in this, I'm out. Because I'm afraid, or if it starts to turn up, I'm afraid. No, I already know there's a very good likelihood, like I said before, we have a trade that plays for the move back to the zone. So am I going to panic out if it just comes back? No, you got to come all the way back. And then you got to push an ATR out of here. It has to push an ATR out of here to prove me wrong. Other than that, I'm holding it. I got another Fed clown here in 5 minutes, so this should get interesting. Anyway, this is what I was going to show you. Now I was short. So remember, my stop was originally an ATR above this event. Now, here's that event. I'm going to move it above that event. Hopefully it's not right in the middle of this. If it is, I'm going to move it out. So let's just plug this in the spreadsheet. Remember, I got out of a couple down here when I was seeing the sellers weren't winning and the buyers came in. That was a prudent move so far. But I still have 4 on. So now I'm going to trail my stop to this event. Just make sure this is correct. Remember, I turned off the stops here. I was wondering where they were. Right there. Couldn't have been here. You see, sell bubbles. Market came down here again. That couldn't have been it. If the market comes down, that's not part of the swipes that's caused the stop run. So I would draw it right there. There's the bottom. How cool is the drawing tool? Just scroll it. Love it. That looks like the top was here too, because this is flatlining. Remember, I have it on reset mode in my SI indicator, so I have stops at 10 seconds, so it'll just draw for 10 seconds. But you see a little, there more came in here and went. Just it wasn't a ton. It was 2, but it was still part of the stop run. So I'll bring that down to here at least. Just keep following it and adjust it for any spikes in the SI indicator. Here's more here. So I'm going to draw that and move it back up here. More here. Draw it up to there. think that's it. No, there's more here too. See that? Move it up. Alright, I think that's right. Now. And the delta is just showing you how wide the zone is. This is a tiny zone. It's only 6 points, 5.7 points. So even with all that adjusting, it's still only 6 points. So that's accurate. So now what I do, I go to my spreadsheet. So my original stop was at 51.25, right? 451.25. Now I plug in my new zone. 385.50. See if I can get the handle right here. And 379.75. Then plug in the current ATR. It's 19.9 now. So instead of 51.75, my new stop is at 08.50. So I just saved myself 43 points of risk if this market moves higher now. And then I can decide what I'm going to do with this new event as far as new strategies, new positions, so on and so forth. So 08.75, let's just make sure that's not smack dab in the middle of this prior zone. It's not. So I will stop out at 08.75 based on the new event. So if this market's truly bearish, this thing should not be able to push an ATR out of here, and that's where my stop is. If this moves lower, then I could potentially put on new strategies, bark and lick, depending on algo guy. This is my filter for the bark and lick. It just has to be in the direction. It's bearish right now, but it looks like it's trying to pull. You can come up with a great thesis. We talked about this a couple Thursdays ago. When you see it try to pull and it can't pull the blue above, so this is an exponential moving average. This is the blue is the short term, the red is the long term. When the blue is below the short term, when the blue is below the red, it's bearish. When the short term blue is above the red, it's bullish. It's fleeting sometimes. It crosses back and forth, but a lot of times we saw like in crude. We'll look at that in a second. You could have caught like a 500 tick move, a $5 move, if you just held it and it never crossed. The blue never crossed. So what I was getting at here, this could be a thesis to the downside too, depending on what happens here. And we have Fed clowns talking too, so you may not want even to trade here. But anyway, tried to pull, couldn't pull the blue, tried again. If this turns around and does this again, then you usually get the bigger move lower. So we'll see here. Anyway, I can take shorts if I want based on this event. Let me put this stop in case this pops on this clown's. Guys, this is the problem, the issue when these guys are talking. If they say something, these algos, I don't know if I mentioned they're about 85-90% of the market, they have the keyword algos. Whatever keyword comes out of their mouth, they automatically buy or sell. Like if he says something positive, bullish, not dovish, they call it, then the market will rip. If he says something bearish, the market. That's the risk you take when this guy's talking, right? And you can see this liquidity is starting to pull a little bit. So just
what more from the Fed is required remains to be seen. And Fed's Bowman says we expect a further increase in the policy rate. We will be given.
So just listen.
Fed Bowman repeats she expects a further increase in the policy rate will be needed in prepared remarks for the private.
Watch how the market trades when this guy says stuff. It's a little delayed because he's reading it. But if it's positive, you'll see this thing spike. That's what I'm saying. All bets are off no matter what you're using with new information hitting the market. So if you don't want to trade while this clown's talking, I wouldn't blame you. I already have the trade on, so I'll hold it. Here we go. The ES is trying to retest this zone. Like right there, inflation's too high. I guarantee there was a little bit of a selling on that. Like that. That was right there. Right? So that's what I'm saying. It's like you can have the best trade on in the world. They say one keyword, and these algos pile on the other way. So if you don't trade right now, it's not a bad idea. Yes, algo guy just crossed, so I can, that event, if a retest fails, I can go short as well. This amount I'm talking. Let's put an alert here just so I don't miss it. Again, I'm rolling the dice with this guy talking, so you got to decide on your own if you're willing to trade while he talks. All right, crude is there's already 30 ticks in my favor ish. Let's see where we may get out of some of these. All right, so this is daily value area high. What's daily value area? It's just one standard deviation from VWAP, but these algos will respond to these areas, right? This is just yesterday's. I don't really pay attention to the value area for one day. I mean, I pay attention to it, but I won't get out of trades. I mean, if things are confluent, then yeah, but that's not even down there. So there's nothing for me to get out right here. You could say daily value area, I want to get out of some. You got 30 ticks in the trade, I wouldn't. If you do it all the time. So there's many traders do it. There's even some in my trade room that I catch all the time. They try to bring in, and this is talked about in trading in the zone too. I haven't gone in my rant there. Let's just pull this up before I get into that rant. This is in here. I thought I had this document up, but I guess not. Hold on. That's the trading strategies. There it is, right here. I'll come back to that. But he talks about. Just trying to get this set up here so I can go back and forth. Like so many times traders have a trade on and they'll bring inputs in that they never look at just to have an excuse to get out of the trade, right? So if you never look at daily value area and all of a sudden say you got short with me, or you shouldn't be mirroring my trades, you should figure out how to do this for yourself. That's what my trade room is for. But say you got short and all of a sudden you're like, oh yeah, that sounds like a good idea to get out. Well, that's not consistent trading. If you do it every time, fine. Then every time you get in a trade and it comes to daily value area high, you need to get out of some without fail. You can't one time say, yeah. The only time where you could judge is by using the order flow like we've been talking about. We use market pulse, tick strike, so on and so forth. But my point is, don't just start bringing things randomly into your trade that you never use otherwise just to give yourself an excuse to get out of your trade, right? This is not an area for me by itself. It was close to baby lug, but I'll see if this thing can move a little lower. And then the areas I would watch. So this does look confluent. So this is where I would probably pay attention. Obviously, we know VWAP is pretty powerful, right? Pretty much bounced off there today. Couldn't get through there earlier. So, and you also want to watch what's working that day, right? If you see VWAP holding, you might want to pay attention when it comes down there again. If you see it just going back and through VWAP a ton, then it's not important that day. Just some days things are important, some days there's not. They're not, right? Anyway, VWAP looks like it's real close to yesterday's value area high, so I would get out of a couple down there. That would be a 70 tick trade. So let's see if we can get down there. Would not surprise me one bit. This is where traders, I guarantee you this, if you guys did get short there, if this turns up, how many are you guys are going to peel out of this because it's just turning up? I'm expecting this to come back here. It's not fun, but I expect it, right? Hopefully it can go straight to 20. But if it turns around, am I going to get scared out of the trade? No. I don't like that either. So we were talking about this in my trade room the other day. You could have rules. We know how liquidity is a magnet. There is a very, very high percentage this gets filled today. Does it mean it's going to happen right now? No. But the point is, you can say, hey, I'm not taking shorts when I see liquidity right above the area. And that's fine too. Just be consistent. That's what I'm saying. All right. I just got stopped out there. Here we go with this nonsense. See, this is what you risk when these guys are talking. Had a nice trade on. Sat through an hour of whipsaw. But I basically scratched. I lost 10 points, 13 points on the 4 lot, and I got out of 2 down here. So I made 40 points for the 2, and I got basically scratched the other one. So it was still a net profitable trade. There's a retest for a yes. Guys, these are markets. Hold on a second. Wow. That's not annoying, is it? Holy crap. All right. Speaking of liquidity, I wonder where this market's going. But anyway, my rules are, here's another example. You may not, if this turns like this, I'm going to take a short. You could say, you know what, no thanks. 1, the Fed guys are talking. 2, you got liquidity up here. You're like, yeah, no shorts for me until this gets filled, and I'll think about shorts. See what I'm saying? You've got to build your own trade plan. I'm giving you guys the blueprint from watching so many of these. I know what works, what doesn't. Just take advantage of that experience, model me, aka copy me, and then add your own stuff in that you find important. Right? That's the whole idea. It's not mirror my trades. That's why people come in my trade room and they think it's just buy here, sell here. No, the trade room and these webinars are about teaching you guys to do this for yourself, which is what you should want. You should not want to mirror anybody's trading. ever. All right, so let's just make sure this is up to date. I'm sure it's higher now. Why is that saying me not available? Why is that saying not available? $4.27.
S&P stocks stock by ES 500 to contracts.
All right, so here's a new event. Look at that. Look at that handy dandy jar right there. New event. Things are changing. Actually, let's see. And I keep making this mistake. I got these bigger monitors so I can have hero up. Like, look at that. Yeah, it's kind of moving with the market, but this just tells you if you're short, right? So say that NASDAQ trade, I didn't have to even hold this thing. You start seeing this market is going to rip. These options players are a big entity, right? So you can say, all right, on the other hand, say the market starts to rip and this thing kept going lower, then you say, I'm not getting out of these. But that is significant. Then this is a huge move. This went from negative 1.25 billion to plus 750 million. That's a 2 billion notional move. Huge. There you go. Right? This was kind of just moving with the market, and that's how it is sometimes. But there's other times that you gain some huge edge when it's moving other. I already showed the other way. I showed you that example earlier from the Twitter feed. All right, so now you got a stop run here. So again, ES held where it should hold, and it put in a buying tail. So this still looks bullish to me overall. If this, I thought this, if this moved a little lower, especially through this zone, which was the high volume node of that puppy, this thing was going to get killed. It's still holding, so I would trade. You could trade, if you have the same opinion, you could trade the long trades, bigger size. Didn't violate anything down there. Try it.
S&P Iceberg by ES 700 to contracts.
Now you get the rare step rows. One of my 6 setups. Where's it at? I lost it. Anyway, this is what I was showing you in my course earlier. Step rows. It's where you get buy stops. This one's a little delayed. Buy stops with buy ice. So you have threshold buy stops. That's why I drew 500, and then here's your buy ice, all in the same area. That is inherently bullish in its own right. If you have my course, I talk about this should rip. It's just common sense, right? We talk about the retail trader. Well, there's the puke, but then you have the big money coming in right behind it. That's bullish. Should be. If this happens to break, then you're going to get a whopper move lower, just inherently in the step rows setup, right? Let's make sure this is correct. Now I'm going to combine these two areas. That did spike up there. You see that? That's the right price. Looks like it started down here. That looks like the right price there. Stops started coming in, then you had the selling, but that was it. So I like that. Zone's perfect. You don't have to adjust it. And then obviously this happened inside this zone, so I'm just going to use this bigger zone. This buy ice happened inside here, 783. So I'm using 4402 quarter to 4400 quarter as my zone. Hey, what do you know? I did the wrong handle. That's something new. 4.11. All right, I want to get out of some of these crew. I don't need to let this thing. That's close enough, especially the sellers are engaging. I want to see if this can push lower here. If not, remember we said 76.20. I think that's what I said, didn't I? Hold on. I have a very good short-term memory, as you guys can see. Yeah, remember I said VWAP and the top of this. So this is close enough. I'm getting out. This is a 70-tick trade, and I had double size on. So I'm getting out. I'm not going to get out of half. I'll get out of a third. I had 18 on. I'm going to get out of 6. Slug and Izzy. Right. The minute I get out, then this is why I talk about using tick strike, right? So you got that firing off, so I may not have to get out there. It might blow right through here. You see the sellers engaging. You could just hold on. I mean, I still have 3/4 on, but I'm not going to be on the screen the whole time, so I don't want to miss this bounce here, if it bounces here. And the other important thing, turn on your market pulse. So this one got to these swipes here got to the most selling, got 51% of the most selling of the last hour. So these aren't remember my threshold 70% until it draws, when it starts drawing the black spike. So I got out of the third here. I'm fine with it. If this rips another 100 points, great. I still have 3/4 of my trade on. Other areas now that I'll look. So I'm always out if another event comes in now. Right, say we get another event, I will trail my stop to that event, and I'm out if that turns bullish. Other than that, I'm trying to ride this puppy. I'll get out of another half of what I have on. I still have on 12. I'll get out of 6 at yellow lug, and then I'll try to hold the rest down the blue lug. That's how I use it. So you can use the lugs for support and resistance. How good was this? I mean, it's just, these are ridiculous. Guys, the minute you get these, you're going to be like, oh my, how have I been trading without these? If these things go down, 3/4 of my room's like, I don't know what to do. I can't trade without these. So you have them support resistance. We talked about having a thesis with them.
Fruit December iceberg sell CL.
There you go.
150 contracts.
That's perfect. Now I will trail my stop to this event. Takes a second. It's still developing, but it should populate in here. The handy dandy drawing tool. There it is. Anyone that's used this SI indicator drawing zone, you got to be on cloud 9 seeing this thing. That's going to be available here very shortly. It's awesome. And you don't have to hear me bitch about the drawing tool anymore. All right, so this started coming in over here. See that bubble? Follow the spike. It spiked up to there. So that was here. This was not part of that because this is flatlining. That's not part of it. That's part of it. So right now, I may have to adjust it, but I'm going to bring the top down to there. I'm sorry. There. That's that spike there. Keep following. Here's another spike. See how it went up to there? See that bubble? Now I got to bring it back up. There you go. More spikes. That's within the zone. That looks like that was there. That looks right. So now I could trail my stop for my short and guarantee myself profit. You see, I didn't just trail my stop because I want to save profit in a random market movement, and then keep hitting this thing. Go to 0. 76.23 to 76.15. Now what I do, go to the spreadsheet. 76.23, 76.15. Put in your ATR, 0.247. So now my stop is at 76.51. I can't remember where it was. I think that's 100 ticks better. Were we at 77.51 earlier? I'll tell you in a second. Pretty close. Yeah, so this is where...
S&P iceberg by ES, 706 contracts.
All right, we'll go there in a second. So it was up here. And here's, for example, did it go to that liquidity right now? No, it could go 200 ticks before it comes back. That's why you never know. That's why I still will put on trades even if there's liquidity up here. Anyway, my stop was an ATR above here. I think it was 76.51 here. Now we bring it down to 76.51. What's that? An ATR above here. If this market's truly bearish, it should never move an ATR outside an ATR away from this event. Now there's ways I can trade this setup as well with different strategies. Bark, lick, so on and so forth. We'll watch it. But right now I'm going to trail my stop, 76.51. I still have 12 on, so all 12 are going to be trailed to that. Slug and Izzy is what I was short. There you go. All right, that's working. Then what we can do, because Algo Guy, let's see if Algo Guy is bearish now. Let's try it. It's right on top. But if this moves away, so we got that set up, right? That sell S that came in. If this does move away, this is probably going to pull that blue below it anyway, and then retest failure. I can take a short with those trading strategies. I'm already short the slug and the Izzy. Then I can potentially put on the lick. This is where I wait for the ATR retest confirm and the bark. Just let this thing develop. If it pops up here, I'm stopping on at 51. It's still going to be a 40 tick winner for the rest of them. I already got out of a third down here. So that's that. Let's see what's going on in here. So what I would do here is we always get questions like, well, what, you know, you had it here, you had it here. Do I just trade off here? This is enough. I would just continue. And this is just a couple ticks lower. Just make it one big zone.
It's fun. There's a core issue on whether another rate hike is needed is inflation.
Oh, really? Well, that's news. A core issue whether a rate hike is needed is inflation. No shit. Pardon my language. I mean, you wonder why I call them clowns. All right. Anyway, this is let's just make this one big zone. No, I didn't want to do that. Let's make sure this is right first of all. I can't believe he just said that. No kidding. All right. See how this spiked here? You got to bring it down. Right there. Spiked here, but that's still in that zone. So that's 99.75, and I would just incorporate all this stuff up to 02. So let's just change the bottom of it. 43.99.75. Always update your ATR for 4.15 now. Not that big of a difference, but sometimes it is. Sometimes this thing spikes, and you got to take into account. So to make this a long setup, needs to touch the validation price of 0650. That's how I determine whether these setups are long or short. From watching so many of them, that's the best way. If you're extremely bullish, and it's kind of bullish, like I said, not kind of, it is bullish, you can jump in the minute you hear the ice come in. You're like, oh, buy ice, great, I'm in. Say it every webinar. This is the science. There's no disputing what's happening. How you trade them is the art. You may say, I don't want to wait for an ATR. I can hop in right here. I'm fine with that. I'll get stopped out and I'll hop in again. I'm fine with that. Fine. Do whatever you guys want to do. The more you watch, then you come up with your own rules. That's the whole idea. If you're new, trade them like I trade them until you get better, and then you can start putting your own spin on things. So I need to see. Let's just make sure this wasn't an Izzy trade. I don't think it was. No, middle of nowhere. I deleted that one zone. So there's nothing to do on the Izzy setup. Algo guy is trying to pull. Hasn't quite done it yet. But like I said, by the time this gets to the validation price, what do we say, 575, it's probably going to pull algo guy, and then I can take longs.
Fitzbarton says, I don't think long rates are very useful as policy variables.
It's whatever. I mean, it's comedy listening to these guys.
Long-term rates have loosened, but I don't think of them as policy variable or equate them to the rate hikes.
This is the guy, this is the kind of talk that's deciding whether you make money or lose money. That's what's even more ridiculous about it. As they put on their own trades. Oh wait, that's illegal now. They used to be able to trade, by the way. They just outlawed it, I think it was last March or the March before. How ridiculous it is that the Fed dudes got to put on trades and they make policy. Like how ridiculous is some stuff? Kind of like politicians can still trade stock. It's insanity is what it is. All right, don't get me started on that rant. All right, so we'll see how this trades out of here. If this fails, then I could take barks and licks to the downside because algo guy is still bearish right now. So do you see how I'm not doing anything? Per my rules, I wait to see how the market reacts to this big volume event. This is very important. There's a lot of stuff that happened in here. What is a lot of stuff? Traders placing their bets. When it moves out of here, somebody's going to be right, somebody's going to be wrong. Speaking of that, let's check out, since some of you think the footprint is the end-all be-all, which it's not, it's important to know the size coming through. So there's big size coming through. NASDAQ, we'd say over 10,000 on these. This is a 40-tick range bar, so basically it's a 10-point range, and when it reverses 10 points, it'll draw a new bar. ES, I think I have it at 2.5 points. Let's see what ES looks like here. I gotta hop off here a little early today too. I got a meeting actually with Spot Gamma, so I gotta get off at 9:25.
December iceberg sell CL 151 contracts.
That is a lot of volume. This is how I use the footprint, right? We say over 30,000. You really want to pay attention. I mean, you could even bring it down here to bring in this 25,000. But you see how nothing's going on here, and then huge investment right here. What does that mean? I don't know yet. I do know that is enough fuel to cause a big move out of here. There's somebody buying it. Actually, this is net selling. See, this is where guys are like, "Oh, it's net seller. I want to get short." I don't care what's I don't care what was happening here. There's two sides of the trade. Somebody's selling it. Somebody's absorbing it. So when it moves out of here, then someone's going to be right. Somebody's going to be wrong. That's what you take advantage of, especially when you have your volume events and your rules around your volume events. So I know this is a ton, right? Again, you can even say this is a line in the sand, basically 44.03 down to 88. I'm not saying use that as a zone, but I will promise you, I'm not going to promise you, but there's a very, very good chance, just inherently, it's common sense, when this moves out of here, below 88 or above where we're at now, you're going to get a sizable move. It's just inherent in these traders that are trapped. So you use that information with this information. See how that works? It's all about volume, guys. I can't stress it enough. I don't care what indicator you think is the golden goose. It doesn't mean anything unless you're getting real-time volume agreeing with the stuff you're looking at. And that's what we're doing. Real-time volume, aka traders placing bets, aka traders wrong, take advantage of the area. All right, let's see if there's any questions. And I gotta hop off here soon. Nothing. Not annoying at all. I don't remember what I said. Well, maybe the Fed clowns. All right, here's another thing too. So say you were long. You wanna, I wasn't long, I remember I stopped out. I could go long here on a retest failure of this event. Remember I stopped out based on this event. Anyway, get one of those, I can go long. But say you're long, you want to pay attention to these prior events. The market will pause here, if not fail. You can see it's struggling to get through here. Why? Because these are trap traders that whoever was in here is praying it comes back and then they get the hell out. That's why it reacts that way. And that's why we play ATR retest failures and things like that. So I just wanted to point that out. That's an area you want to watch. Crude is not being crude today. It's being very nice. This is very rare. Mariah Carey here, very rare. What song is that from? For you rappers out there. Someone better know that. Mariah Carey here, very rare. It is in the song. I'm 51 and I know it. Macklemore, you guys are just pathetic, man. All right, so anyway, very rare that there was no torture here. You usually get this for about 2 hours, so that's telling you something too. But you will get sustained moves like this. What did we talk about earlier? What were we seeing in crude? We were seeing heavy relative volume. Well, when you see heavy relative volume, you expect continuation many times. It's less likely to do that when you get that because these algos get loaded up and they got to puke. So it's like a cascade, right? So that was kind of telling you this could keep going. Now I'm going to jinx it, of course, and it's going to rip back, but pay attention to your relative volume. Pay attention to your footprint. Pay attention to relative volume. But the king is the volume event. So I already trailed my stop to this stuff. There is a way, like I said, I could go short this most recent event too. Did I even draw this? Is this the one I drew? This is a new one, isn't it? Yeah, I can trail my stop even lower now. Just see what I want to do here. That was, yeah, this was before. Now you had this. That was not threshold. This was. It did draw. I just didn't hear him say it. So let's just see. That went all the way up to here. Right there. Looks like it came down here. And you can see it on chart too. See this black line? So now I can trail my stop to this, plug this in, and I'm going to go short off of this other strategies potentially. 76.30 to 76.22. Let's just adjust this and I got to hop off here. 76.30. Oh, I already had my stop on the first zone. So I'm not going to, I rarely move my stop higher. Like this should be a little higher. But I'm just going to leave it where it was. But for this new event, I will wait for the validation. If it trades 97, retest failure, I'm going to take a short. Did not get down to 97 here, so this could still be a bullish setup. And I remember I trailed my stop to that event, is at 51. I'm not going to move it higher because of that. It's already in. I don't move my stops. Very, very rarely. Mariah Carey here, very rare. Anyway, this could turn into be a bullish setup. Keep an eye on algo guy. Again, you get all the specs for this. Did you just see this swipe, by the way? This is not pulled, so this is still bullish. So I could, if this turns bullish, now the buyers are coming in. So here's not, I mean, my stop's at 51, but you can use this. Say you're short. You're like, okay, their buyers are coming in. If they start to win out of here, I'm gonna get out of more. I'm already stopping out right here anyway, but this is how you use this stuff. All right, guys, I gotta get on this other meeting. Hopefully you learn a little bit. Watch what happens out of this zone. ATR, you see all the, again, come in my room, or go to my website, scottpulcinitrader.org, and get this spreadsheet. It's worth its weight in gold times 1,000. If we see the validation price of 0650, that's a long setup. If we see the validation price of 9550, it's a short setup, and I will trade accordingly. Other than that, yes, I said Mariah Carey. Mariah Carey, Hair Very Rare is what I said. Macklemore. I forgot the song. I'm not into rap, but I like Macklemore. All right, I will see you guys next Thursday. I do this every day in my trading room. Most of the time, 2 times a day, morning and afternoon. But lately, the afternoon has just been horrific, so we've been skipping. But come on over. You will learn. I can promise you that. All right, have a good weekend, guys. I will see you next Thursday.